Okay, welcome back, everybody. This is going to be our first lesson on institutional order flow. Now, just to give everyone a quick premise, the concepts I'm going to be going over tonight, they're not found by me, they're found by ICT. I'm just relaying how I use them and how they play a crucial role in my trading. So, to begin, I'm this is going to be a nice little introduction into what order flow is, uh, kind of where it should be, what it should look like, and how everything ties together, right? So we're gonna have a few more videos that come out, and then once I start the AL60 series and the London model series, you guys will be able to see how order flow should begin from these specific points, right around these specific times. Okay. But for now, we're just gonna get in the habit of spotting order flow. What is it, where it should originate from, and where we kind of want to focus our eye on it. So I'm going to tie this into the lesson we had done last week, where it was the building a weekly range lesson. I'm just going to bring a few little helpful tools up. Okay. So let's get into it from here. So this week so far, I'm going to pop out on a 15-minute chart. Quick little review on the building weekly range series, and then we'll get right into it. We had an opening price on Monday, heavy decline. Tuesday, we dropped below Monday's low. Big explosion off CPI. Now, I had kind of give you guys the premise that I don't trade ahead of CPI. And I had made a comment that I had a level below us. And then I also had Monday's high up because I kind of want to see us dig. I'll pull it up quick. On a weekly, there was an order block down here, and I want to see the high of it get touched. And I think it could be saving it for next week. And if you kind of notice, we'll create a gap down in here on a weekly after this week closes. So I think it's kind of just a layering effect, which is perfectly okay. But I want to see price dig a little bit deeper for me to get long ahead of CPI. We obviously didn't get that. Price just exploded right off of Monday's low. Very nice. This is exactly what you should expect off of these initial range levels. So if we were to throw our weekly range delineations on, it would look something like this. Okay. Now, what I want you guys to see and I want you guys to study is one-way directional order flow. So you guys can kind of see in here on a 15-minute, it gets a little bit more clear, but this is not directional order flow. This is, this is, this is right here, a little bit in there, and then right up in here. So you can see we have little spurts of it. And then sitting in between that is consolidation. This is the tricky part in trading, in my opinion. It's trying to avoid these times and trying to get in sync with this. Now, you never need to catch the exact high down to the exact low or catch the exact low. You just need to know where should this originate from and where's it likely heading. That is why we went back and did the initial weekly range and the building weekly range series. That's why we need to start with that. So you'll see how everything I'm going to teach over the next couple months is all going to tie together, and the order I release it in is how it's going to make sense. So what I'm doing is I'm looking for directional order flow below the initial sell side and above the initial buy side, right? So depending what gets hit first, one of them will become a target. And like I said, for me, I don't trade CPI, so catching this move was kind of tough. I had stated once we got coming up close to Monday's high, so once we broke above Tuesday's high, I was going to change gears and start looking for this inefficiency right here and then higher into buy side. Now, you could have done things like take projections and you could have found some of these levels. They could have been levels you trade to slightly above the highs, half a standard deviation. I do not have one in here, but it probably sits roughly right around here. That could be used for tomorrow, next week, whatever it is. But you could just see how there's these turning points above and below these, right? And what we want to do as traders is we want to look at what are the most likely times, right? So time of day, session beginning, session ending. When is this going to start this one-way directional order flow? Because that is what we have to capitalize in as traders. You will get chopped up inside of this and it sucks because you're waiting for a move. It gives you a little bit, comes back against you. You know, you try and move your stop loss up, you get stopped out, you want to re-enter, but you already missed a good entry, so now you're forcing back in. There's a whole lot of emotions that like to swing in consolidation. That's why it's out there. It's time distortion, it's consolidating, it's meant to trip up a trader. So being able to spot the prices that this one-way order flow should begin in and understanding what it looks like is crucial because in this example, we have a Tuesday low of the week, price pulls off of it, consolidates, and then one-way order flow higher. Today, I had studied a short that was right after 9:30, and then I had taken one long position. And you'll see the order flow on the lower time frame I had taken. It was perfect, just algorithmic coded perfection, in my opinion. So I'm going to bring us into that, and you're going to see what one-way order flow looks like and what characteristics should follow. Okay, so I had taken this right in here. So for those of you who do not understand this, that these markets are fractal, you'd have to understand that time of day should restart that whole initial range liquidity idea, okay? And that being 7 in the morning. So this is all just common ICT stuff. If you take 7 a.m. and you delineate each high and low, you'll see how it runs it. It makes new points and it's generating back and forth. So what I had did was this morning we had I believe it was unemployment claims this morning at 8:30. We'd created a range from it. And I was just waiting for one side to get tagged so I could see what the other looks like. And I'll make these just we'll go black. Okay. And I was watching these points for one-way order flow to begin because if you think about it, instead of imagine this being Tuesday's, you know what we saw this week, Tuesday's low, price trades off of it. Wednesday drop below it. It's the exact same idea, just with inside the day. It's that whole building or the initial building a weekly range using initial liquidity is the exact same thing on a day. It's engineering itself to rock and run and then explode with that one-way order flow idea. So what does this one-way order flow look like? So what I like to see in some signatures for me is seeing one, liquidity be taken. So in this case, when we had our initial range set at 8:30, sell side got taken first. Okay. Now I had taken a position. You guys could go look inside the Telegram. It was right in here. But pretty much what I like to see is I want to see after taking liquidity, do we have the urge to kind of trade back above, in this case, this low, and do gaps support higher prices? Do down close candles support higher prices? And any other ICT array that you could think about, is it there and does it get supported by higher prices? So this is where I've said, in my opinion, early on as an ICT student, I kind of struggled because I want to see everything as an array. So like I would be in here for an example, and I would look at this as a run on liquidity, and I would look at this as a down close candle, so this would be an order block, and I'd be going long in here, and then getting stopped out and just getting ruined because I wasn't looking at the right points where it's actually going to spring from. Now, that being said, I also looked at everything as an array, and that's not true. Arrays, in my opinion, in my studies, this might not be true to what ICT says, but in my studies, arrays only work when they're timed to do so. What that means is liquidity's been taken, now the arrays will start. So to start here down here at the bottom, you'd have a down close candle. We trade above it. This is the first sign, and you guys will see in AL60, this is the first thing I'm looking for, is this down close candle to get traded above. Does price hold this candle? It does. if I draw a box just for easier reference points, you can see price stayed inside of that. And then we got a heavy lift. Did price hold this candle? Yes. You got gaps in here. And as price moves heavy, you guys will see these are all just breakaway gaps. Where's our first gap we traded into? Right in here. This is why I entered in. I entered right here, another one here, one more right in here. And then as price started coming back down, I was entering in here using this candle. And my stop loss sat right about 21.6. I think it was 85, I believe, right there. Because when order flow is set to work, you'll see things like gaps being respected down to a T. Look at the 50%, stops right inside that gap, turns around on a dime. It's respecting it. There's no more of that, you highlight this gap in here, price blows through it, because that's what's supposed to happen. But when time aligns and price is taken, you now see some coded perfection where it just wants to deliver. And like I said, do down close candles support price. So as you're tracking up, imagine it like you have a stop loss. So we'll use this red line for an example. So let's say you'd gotten in down at 21,638. Your stop loss would sit right here. As you get this new down close candle and price trades above it, your stop loss jumps to right there. And then as you get new down close candles and gaps, your stop loss should be moving above it. New fair value gap, your stop loss would sit right below that. Down close candle, price finally breaks above. Stop loss sits right below this candle. This candle you want to see held now. This gap you want to see respect. Did this gap ultimately work? Yeah, you had a little coloring outside the lines, fine. But the main thing I look for are these down close candles to hold price. And you don't want to see lows being violated. So as price moves higher, you have this tight order flow up in here. And this is the stuff I really like. And at first, it's uncomfortable because it's very slow. And, when you see ICT entries, they're like this and they explode. But in my opinion, this is a little more valuable because you could get tighter entries in here, tighter stop losses. And if price starts moving slow, you almost have to take it as a compliment that you're on the right side and they're trying to get you to get out before they deliver it there, right? That's the way I think of it. So, look at this down close candle in here. You got a swing low, down close candle. It's respected here. And I mainly look at the highs like this. The high down to the open, just like ICT does. Is that respected? Yes, it is. That could be an entry in there to someone's model, whatever, however you like to scale in. You go on a 15-second and be entering all inside that. You have a new gap right in here, very small, but there's still a gap in there. Respected. New down close candle right here. Is this candle respected? It sure is. And look at how, although sometimes you will see it color outside of that area, the candle in itself is being respected and it's not trading below it. And as soon as it does, that's your indication. All right, I'm going to step out of this. New down close candles, price trades above them. They're being respected all the way up into our target, which was 21,735. I think it was 24. 21,734 and 3/4. All the way up until our target got delivered. So I had taken longs in here, exited a bunch in here, and then I actually was trailing my stop loss. I want to see this stay open, so this stopped out my remainder. I think I had 6 contracts down here, but even this move in itself, all down in here, a 30 handle movement with 6 contracts, you guys could do the math. It's a very good payday, right? This would have been sweet if it just wanted to spool right up, but I'm trailing my stop loss because, in my opinion, once the order flow begins, you want to start, as I'm doing, tracking it right up. And I just wanted to see this stay as a breakaway and just that speed continue, and it just didn't happen there. Now, if I had entries lower, meaning down in here, I would have trailed it up until that, and I would have held for that. But since I was entering in here, I didn't really want to see it hang around here, come all the way back down in. I just kind of want to see it start spooling off that. So a bulk of the profits came off of this run above this high, closed in at 21,721. Right around here, I believe I closed 5 of them out, and I had one runner on for the rest that got stopped out right about 21,709. So I want to show you guys more about this order flow. And if you guys look, what I challenge you guys to do, you guys can pause it. But even something like this, look at how when down close candles close below up close candles, they're respected. So quick little drill in here. Start with the highest candle, drag it across. Okay. Respected. Price then breaks lower. You have two new up close candles. Respected. Right in here. Trades lower. Now, ICT's rules, you guys could do whatever you guys like, but ICT's rules would say these are the highest two candles, not this, because this one traded higher than this one. So this is encapsulated inside this candle's range. So it would be like that. Respected, traded lower. Now, what I look for is I don't consider this trading lower than this candle. It needs to have the body closes. So the next time you see an up close candle, you want the bodies to fully enclose below it. So look at this candle. Did these bodies close below it? They did not. They stopped short. These candles, did these ones close below it? Yes, they did. And then look at the reaction. So this is pretty much how I'm spotting order flow and what I'm using it for. And this is a huge part in my trading. This is how I get those tiny little 1 minute entries, and you see that like nice perfection because this is how it should react. And you could feel safe putting your stop loss there because if it breaks outside of that, you don't want to be in. Now, once again, if you think that initial range liquidity idea, there could have been scalps from this lower. And you might not have known it was going to run all the way down here. And I had posted to my Twitter. It was actually some nice little perfection. Not that. Some coded perfection in here with that run. And I did not use this opening range gap, but I thought it was so cool to see price run all the way down, nail it down to a T, and then start working higher. I thought that was very, very unique. But like I said, guys, you guys could see, look at this order flow. Just spot lower. And then look at new up close candle, traded below. And then even more importantly, look at that opening range get, or the opening price down to the wick get nailed. And then those heavy drops come. New down close candles, up close candles, right into the middle, another heavy drop below this candle. Now, you could see as you're getting lower and lower, your stop loss should still be trailing down. You're getting these push. You get this new up close candle. So look at these up close candles. You did get a close below it. So you could have used these, and you could, even if you did, I don't love those two candles right there, but even if you did, price still respected in here. You then get a new up close candle. Price took a nice big dive below it. And then this is where you would have gotten stopped out right at 1202. And just say this was your model. You like to scalp from there. I won't even give the best entry. We'll say we got in somewhere about here. That could have been another nice 30 handle run before you got stopped out, just trailing your stop. And then look it right back into it. Look it over here again. So let's say I know on a 5 minute, this is a down close candle and order block. I was actually studying a run. I just didn't position myself in it. But same exact concept in here. Look at the order flow begin. Down close candles. Nice gap in here. And we're off to the races. Two new down close candles. A gap. Look at how they support price and just keep ripping higher and higher. And you could just track this right up. New gap. New down close candles. And if you can't understand this, you have to go back to ICTs because this is the basics. This is the introduction to my order flow that I use. This is all ICT concepts, but this is what I look for, how I study it. And this is everything I use in terms of AL60s, which is just a model I have as a universal fractal scalping, swing trading, intraday trading, session trading, a very well-rounded model using time. And so I use for my London model, how to start getting in. This is what I scalp with. This is what I use, first presentation with. There's so many factors, and it all begins with this. You need to know how to stalk this order flow. Because in my opinion, if you could read this, you could make a lot of money. Because, some of you guys want those big, massive runs, that are like this low all the way up to this high. But I'm going to put something in perspective for you. Let's say you're a traditional trader, you spot like a 1 to 3, whatever it is. Maybe this was your optimal trade entry. So, well, just to make it real, this was something I would do early on in my ICT days. At 50%, I would buy it, and my stop loss would sit right here. And this is a good trade. Don't, get it wrong, but that's a 1 to 1.6. When I learned to spot that, when I learned to spot that it was going to start and then to study that order flow, look at something like this now. How much crazier this is. Because remember, I was entering down in here, so I was getting a much better entry, but my stop loss had to accommodate down to here. Now I'm saying, okay, if it's going to go, it's going to hold this one candle. And look at that. That almost ran a 1 to 3, and that's not the best entry. This is just a very average entry. Nice tight, and your stop loss even could have sat right about there. Because in my opinion, I don't want to see it trading into the bottom half of the wick. But, 50% all common rules. And in my opinion, if it's going to drop below this candle right here, it's going to take out the low. So a lot of times you'll see me bump it right up to this candle's low, and it's covering that stop loss. And like I said, that it even boosted up a little bit, but this is the type of thing. And if you could study this, look at just how clean that run is. No, almost no drawdown. This is like in what I always studied as an ICT style entry, where it's a couple wicks in and then it just starts taking off in your favor. Once you learn to spot this, you go and you look at something like the 15-minute. You say, okay, we're above or below. And like I said, this is just introduction. You're above or below these initial range liquidity. So let's say Tuesday, we're sitting, we don't care what was in here. I know I had taken a long that was up into this gap. You do not need that. You could study just under these points or above these points. Look for your order flow and you will do extremely well. So let's look at this. Let's say you were studying 15-minute order flow, price drops down, you immediately trade above that candle. So I'm looking at this right here. Does this support price? It does. So what I like to do is I'll hop in a 1-minute chart. I'm just going to do a little bar replay. And this is another model in itself that I used to scalp with that you guys will see in the near future. But we're just going to jump right into this. So what I do is as soon as we get that turnaround, I'll be on a 1-minute chart and I'm studying inside that blue box. And what do you have? That same exact idea, and you know where it's going to originate from. You want to see this hold. So when I start seeing things like this, price comes into it, I'm waiting for an up close candle to fully close above it. Boom. Did this one fully close above? Did not. It traded above, but did not close above. Did this candle close above this down close? Yes. Like I said, this is one of my favorite scalping models to use. And now look at that. And you could trade it even just back to that initial range and look at the risk to reward. And I'm not a huge risk to reward like it needs to be 1 to 10. I take quality. But look at this setup in itself. And even minute one, once again, look how I just went to the setup. I did not take this. This was outside of my trading time. This is 4 in the afternoon, so after hours. But even look at after hours trading, how well it just respected what I just told you guys. Down close candle. When did it get closed above? Here? No. New down close candle. Did it get traded above? Yes, right there. Is this candle supported? Yes, it is. So once again, let's say this was my stop loss. It would start right here, and you could put it below the low if that makes you feel comfortable at first. Once you get your first down close candle traded above, bang, that's your new stop loss. Once you get a new down close candle traded above, boom, that's your new stop loss. And you're trading up, and then you could also do things like gaps. So, you could have squeezed it right in here because you have this gap in here. Price is sat in here, new down close candles, and I know some of them are small, but this is how you stalk order flow. And then you'd move it up once you got the gap. New down close candles, price trades above, and you're just trickling that price. Down close candle, it didn't really trade above. You're in those after hours, so the price starts getting very slow. But even that, its gaps are still holding. These down close candles are kind of holding. They're very tight with each other, but it feeds it right up back into that initial range low. And that in itself happens every single week. This happens every single day. If you could spot where those important levels are. Like I said, these are the important things in trading. Once you could spot this, you have an unlimited amount of setups because a 15-minute, this happens all day on. I could literally do this all the time. And there's going to be a day when I hop on live streams and I do this all day because it's really not that hard. You just have to know to trail up and don't get greedy. Do not, start doing stupid things if you take a quick loss because the losses will happen quick. But you have to understand when they work out, they look like this and it'll offer you an insane reward compared to what you were just risking. You could go in and risk, 0.10% or a quarter of a percent, and you could walk out with a few percent when one of them goes off. So it's the risk to reward aspect behind these and using that fractal nature to scale yourself in. And like I said, just use that order flow to stalk your way up. So guys, I hope this was a nice little introduction for you. As always, make sure if any of this is not well known, in terms of the ICT arrays, you need to go back and you need to study his concepts before you come and study how I use them. Um, and that being said, guys, I hope you guys learned a few things. This is just the introduction. I'm going to show you guys where I look for it outside of those initial ranges, and we're going to tie it all in together between AL60, the London model, other scalping models. But this really is the root of everything. Once you learn to spot this, it gets a lot easier. Once you could spot and trust this, I should say, it gets a lot easier. So guys, I hope you guys learned something, and we are going to be looking at producing another video probably Saturday to Sunday. There will probably be nothing tomorrow. My schedule's a little booked up, but going into the weekend, I'm gonna sit down and we're gonna pump out the next video for our order flow lessons. Hope you guys have a good night, and you guys could pay attention in the Telegram tomorrow for what we're looking on for our Friday.